Welcome back to another amazing episode of Investors Playbook Live. As always, you have your co-hosts Deshaun and Cornell. Market took a crazy turn on Friday. We had to jump on here and immediately talk about what is going on. So much tension. If you see the name of this video, then you will understand what we're talking about. The US and China are at it again. Okay. Um, Essentially what happened on Friday was Trump announced a potential 100% tariff on Chinese imports. 100% tariff is crazy. And this is on top of the tariffs that already exist, right? So, what is it that, like, let's talk about the reason why, right? We saw that 100% tariff on Chinese imports from Trump, how the market reacted, and how we could possibly maneuver or manage our finances in this shaky uncertainty, um, closed government shutdown landscape, right? Cornell, what are your thoughts, man?
Uh, there's definitely a lot going on. Sometimes I talk to different people about this. There's it's just like a lot of the things that I talk about in different communities that I'm in, and like some people think that this could be like a strategic play, and my thing is, I don't think it is. I really think he's just wishy-washy and rash with his decisions. If this is strategic, then there's a genius at play. I don't know if it's him or someone informing him on how to maneuver, but there's a lot going on. And I know in some of these things he is getting his way. But the thing that I'm worried about is our relationships with other countries because of the decisions that he's making. Like we need China.
Yeah.
Out of any other country, we need China like the most. Is there a country we need more than China?
We're the two powerhouses of the world, essentially, right?
And we're in debt to them. So
Yeah.
it's like, what are we really doing? And is it worth our relationship with China?
Right. Right. Yeah. I think that it's it's also a power struggle combined with a, a bit of ego, right? There's that. Um, but the thing that happened and the reason why, well, first you have Trump, who has already been announcing tariffs, right? We've seen that when he first got into office. This came as more of a reaction, though. This came as of a reaction, which basically um, China put restrictions on certain rare earth metals that are powering everything we do now, from AI to EV motors to a lot of the microchips to magnets, right? Elements like, and look, y'all can correct me if I pronounce it wrong, but neodymium, dysprosium, these are rare earth metals that are needed to that are used in a lot of the high tech equipment that are built by companies around the world, right? We're talking satellites, EV motors, especially we already know when we talk chips, we're talking AI, which is where everyone is going right now, right? Look, y'all, I see it's a couple people in the chat. I just want to remind y'all what we're talking about. We are talking about what happened last week. Right now, we're seeing a battle, right? A battle of trade between the US and China. We're seeing that there is a threat of 100% tariffs in reaction to um, China putting a restriction on rare earth metals, right? So we're seeing a lot of tension happening. We're seeing a lot of tension. And what happened on Friday specifically is, as soon as that announcement was made, the market took a crazy tumble, right? Like it got hit severely. Like the market was climbing pretty much all week roughly, and then it took a crazy hit on that Friday. So, and that was in reaction to Trump's announcement of the potential 100% tariffs. It made everybody scared. It shook everybody. So we saw a lot of selling in the market. Question is, will that selling continue into next week? Are we going to continue to see that slide? And only time will tell. But I imagine that because it happened on a Friday, we're gonna get some of that delayed reaction on Monday too. We might see some more red next week. But yeah, um, yeah, that was US response to to China essentially uh putting those restrictions on the rare earth metals. Um, so yeah, man. What about you, Cornell? What do you think, man? You saw what happened on Friday. How are you reacting? How are you going to maneuver? Or are you gonna, do anything? You just kind of gonna what do you think?
All right, so I love times like this.
Mm-hmm.
This is where I accumulate most of my options, my long term options, my stocks, things of that nature. So like a lot of things drop. Bitcoin, when as low as like 109,000 is back up to 112,000. But it came from a high of 125,000.
Mm,
Also, you have the S&P 500 that dropped almost 3% in one day. You got Nvidia that dropped, Microsoft. So really, there are a lot of reputable companies and in the indexes, things of that nature that you can put into while it drops. Do I think the drop is over? No, I don't. There's still a lot of factors that play into this drop that have not been rectified yet. As Deshaun mentioned, the tension with China. Also, we have the the suspected overvaluation of the market because we came from we came from all time highs. We were getting all time high after all time high.
mm-hmm.
All right, so that's also a big thing, and also the vulnerability of the tech sector, which is the highest, um, the most valued, the most holdings. Tech has the most holdings from the S&P 500 and the
Yeah.
QQQ. So with those going down, so of course the ETFs are going to take a big hit because that's what the largest holdings are. And
Yeah.
also we have the economic uncertainty. We do have the government shutdown, which we talked about last week, that could play a factor in the stock market. So we kind of called this, to be honest, because we just
Mm-hmm.
talked about this on Sunday, and look at where we are now. Even though that wasn't the direct cause of the market, it took the 100%. I think all of these play a factor into why the stock market is diving now. So my suggestion to anybody, I'm not giving advice or anything. This is what I'm going to do. I'm going to continue to watch the market. Of course, I'm a dollar cost average, but when I get to a point where I feel like it's leveling out, I am going to get my leaps in my options. I'm going to put them probably like a year out for my Microsoft, my ETF, following Bitcoin, things of that nature, so I can make a big profit. What about you?
Absolutely. Nah, man, I think a lot of what you said is very important. The tech sector, I mean, it has grown so significant in the past, I'll even just say 20 years, right? It's become a powerhouse. And almost been it's almost gotten to the point to where like no other sector, like sometimes we see sectors rotate with valuation, but it's just been tech. It's been tech for the last 10, 20 years. And I'm not
Mhm.
even saying that this is a market rotation out of growth. I think that what happens is when things like 100% tariff, government shutdown, a lot of things that strike fear into US investors or investors in general, they start to rotate out of things that are growing so rapidly and they want to put their money into things that are quote unquote safer, right? Um, but I will say this, that I feel like a lot of the tech companies, right, though it might seem like they are growing at a very rapid pace, I personally feel like are in that safe realm. But to investors, it could be defense contracting companies. All right, we're talking about things like Lockheed Martin, Northrop Grumman, the mining companies, even like the oil and gas companies, and gold. We have been seeing a breakout on gold for at least the last few years, right? Gold has just been hitting all-time highs over and over and over again, right? So it's really about watching volatility, like you mentioned, Cornell. When is that that rapid drop? When is that going to start slowing down and turning more into a curve? That's when you can really say, all right, now's a good time. The market always corrects. Historically, it has always correct. So we have no reason to say that it won't correct this time. And this was such a sharp turn, right? That I don't imagine this being the one where the market doesn't correct and it just continues to go down into oblivion. So I think that it's good to continue that dollar cost averaging. Again, investors see this, they don't panic, and instead they strategize and figure out how can they take advantage of such a opportune situation. Okay. Market, the market has gone on sale. And I won't even say that because it's still extremely high. A 3% drop, it's been hitting all-time highs over and over again, like you said. So yes, it did take a dip. The question now is how far down will the dip go? How long will the government shutdown happen? Will these 100% tariffs actually stick? Right? All those play a part in the future of where the market could potentially go. So, my advice, and this isn't even stock market advice. It's just normal advice. Don't panic. Right? Just don't panic. Don't panic, don't rush, don't dump everything out of your 401k, don't liquidate everything and put it under your mattress because you're afraid that you're going to lose all your money. I guess it technically is, but my recommendation, right? Just try and see what happens with the market because if 2020 taught us anything, is that those who act fast end up sometimes regretting it. And a lot of people saw 2020, took hundreds of thousands of dollars out only for the market to shoot higher a month later, right? So I would just say don't panic. Just watch.
Yeah.
Watch for that
And the thing
volatility.
and the
Hmm.
thing about it, when it turns around, it's not going to be something that you can catch. It's going to be something like Trump making a tweet talking about he just talked to China and now they're good again. And then the market's going to shoot up and you're still
Hmm.
going to be out of the market. So you can't take your well, you can, but you shouldn't just take your money out
Right.
and try to catch it back in. Like, yeah, you can do that with money that you don't have in the market. Yeah, I'm gonna try and time it a little bit. I don't always suggest that. Of course, I always suggest dollar cost averaging, but for me, I am going to try and allow it to fall to a number that I think would be sufficient, and I'm going to load up on options because
That's
I
it.
I do feel like history doesn't repeat itself, but it rhymes. And if you look at the overall chart of the stock market, it has recovered from every single crash, every single time.
Yep. That's it. I think that's some solid advice there, my brother. Yeah, man. So the play here is not fear, it's awareness. Understand what's going on, make a strategic move, and yeah, our goal, get off the sidelines. Just do something, right? Even if it's you studying and learning about the stock market, learning what move you're gonna make next. Just get off the sidelines and take a step forward. So yeah, but I mean, what's up? What else we got for him today, Cornell? What you thinking?
I think that's pretty much it in a nutshell,
Solid,
man.
solid.
Just be prepared, know what's going on, stay informed. I think that's the biggest thing, man. Watch what's going on. Stay off of these uh celebrities lives. Stay out of these celebrity lives. They don't care about you. They don't know you. They don't know you exist. So like stop putting so much time and effort into knowing what they into knowing what they have going on every single day and what their relationships are like. Like that's crazy. You're insane. Just
Yeah.
stop. Stop.
Worry about yourself. Is what he said. Nah, that's facts though, man. But all right. Look, we hope y'all learned something. As always, appreciate you all for tuning in. Yeah, we're gonna catch y'all next week.
All right, for sure.
Peace.
Peace.